Claiming home office deduction. How to avoid an IRS audit. Are you worried about claiming the home office deduction and the possibility of an Internal Revenue Service audit? You are not alone. Many people want to take advantage of this deduction but fear the scrutiny that may come with it. Let's break down how you can claim this deduction while minimizing the risk of an audit. First, it is essential to understand that the home office must be used exclusively and regularly for business purposes. This means that the space should be dedicated solely to work activities. If you use the area for personal activities, it could jeopardize your claim. The home office should also be your principal place of business or a location where you regularly meet clients or customers. Next, consider the size of the space you are claiming. If you claim a large portion of your home, such as 90% of a small apartment, this could raise red flags. A more reasonable percentage, like 10%, is less likely to attract attention from the Internal Revenue Service. Your profession also plays a role in audit risk. If claiming a home office is common in your field, like freelance software developers, the Internal Revenue Service is less likely to question it. However, if your profession rarely involves home offices, such as certain types of employees, claiming this deduction could be a warning sign. Proper record keeping is another key factor. You should maintain detailed records of expenses related to your home office. This includes utilities, insurance, repairs, and depreciation. Keeping photos or other evidence of your dedicated workspace can also be beneficial. Good documentation will support your claim if the Internal Revenue Service requests proof. Avoiding common mistakes is crucial. Overstating expenses, underreporting income, or claiming losses inconsistent with your business activity can raise audit risk. Large fluctuations in income or repeated business losses can draw the Internal Revenue Service's attention. From a property tax management perspective, it is important to understand how home office deductions interact with your overall property expenses. This deduction allows you to allocate a portion of your home-related costs to business use, which can help reduce your taxable income. However, keep in mind that depreciation may affect capital gains tax when you sell your home. To summarize, to avoid an Internal Revenue Service audit when claiming the home office deduction, ensure that you use the space exclusively and regularly for business. Claim a reasonable portion of your home based on actual use. Make sure your profession commonly justifies a home office. Keep detailed and organized records of expenses and workspace. Report income accurately and avoid suspicious patterns like excessive losses. Understanding how the deduction affects your overall property tax and future tax implications is also important. By following these guidelines, you can help ensure that your home office deduction is legitimate and well documented, reducing the likelihood of attracting Internal Revenue Service scrutiny.